Hey everyone, this is Know Your Potential, NYP episode 4, and we'll be talking about Gamestop, Wall Street bets, stock market shorting, and fundamental issues with Wall Street finance.
You're listening to Know Your Potential with David and Phil Ngo, your source for motivational insight and discussion of all things relating to business, technology, and life. We banter and interview like-minded individuals, striving to be the best version of themselves, generate value for society, and achieve the life they want to live.
Hey everyone, it's Phil Ngo here.
Hey everyone, and this is David Ngo. I hope you guys all enjoyed our last episode about Bitcoin. We were planning to not have an episode this week because we wanted to give ourselves a bit of extra time to work on other things. But with what's going on in the markets right now, and everything is pretty crazy and wild, we really wanted to have an impromptu episode to talk about what's going on. So Phil, you want to explain what the episode's about?
Yeah, for sure. So like this market mania that's happening with GameStop and the market conditions on Wall Street is just absolutely nuts that we had to put an episode together for everyone. Before we actually start with that, just a disclaimer, none of these episodes are supposed to give any sort of investment advice. It's purely educational to aid your personal finance decisions. Just like cryptocurrency, stock markets as well is very volatile, and you should only invest with money you are comfortable losing and do your own research. And one more thing before we go ahead with the episode, the Bitcoin giveaway is still on. So if you are interested, go to our Instagram page. You can link to it through knowyourpotential.com or instagram.com/knowyourpotential. And all you have to do is just share the post. Make sure to tag us with it for 3 entries, and then also follow Dave Ngo MTL, Phil.knows, and also Know Your Potential to be able to qualify for the Bitcoin giveaway, and just tag your awesome friends who love the podcast just as much as you do.
And just a reminder, we're giving it away on February 2nd, Tuesday. So there's still a few more days left for anyone who wants to try to get a chance of winning this Bitcoin.
Awesome. So here we go. We got a lot to talk about. So David, can you explain to everyone what stock shorting is? You'll need this context to understand what's actually happening.
All right. So what's happening right now in the market is that this stock ticker, GameStop, pretty much there is about 140% of its current shares out there that are being shorted. And what shorted means is pretty much someone is taking one of these shares, they're borrowing the share from somebody, and they're reselling it at the market price or whatever price they're asking to sell it for. Once the share gets sold, pretty much they collect the money first. And the idea is pretty much this guy hopes that the price keeps going down so that when he has to buy the stock back and return it to wherever he borrowed it from, he's buying it at a cheaper price and he gets to keep the price difference. So a quick example of this is, for example, Phil buys a stock for, he takes a stock that's $10, he'll take it, he'll sell it to the next guy at the $10 price. And then if the price gets to eventually drop, so it's at $8, Phil decides to say, hey, you know what? At $8, I'm going to buy the stock back at $8, and the $2 that's left keeps in my pocket, and I'm returning the share back to that guy that I borrowed it from. So technically, he made the $2 on there. But what happens is what happens when the price goes up is these guys who get shorted, they have to buy it back at a higher price. So using that same analogy, if Phil bought the stock or sold the stock at $10, he collected $10 for it, and then the price of the stock went up to $12. Well, Phil now has to take $2 out of his own pocket, so that there is a total of $12 to buy that share back and return it back to whoever they borrowed it from.
Right.
So what's happening? Yeah, go ahead, Phil.
Oh no, I was just going to say what that means is that for the person shorting, there really is an unlimited sort of liability when it comes to that, right? Because at the end of the day, say the price actually went from $10 to say not $100, maybe $1,000, or say $10,000. Like at that point, it's kind of like, okay, well now I bought a stock at $10, but I have to buy it back at $10,000 now. You got screwed hardcore.
Yeah.
Like there's no, like you can have more than a 100% loss.
Exactly. So pretty much with anybody who's shorting it, theoretically, the most somebody can gain from it is, I guess, 100%, right? So you're buying it, you're taking the stock, selling it at $10, and if it goes to $0 up, you don't have to return the stock and it's done. You get to keep the whole $10. But as Phil just mentioned, if the stock goes from, when you sold it at $10 and somehow this stock magically went up to, even just $100, it means that you have to pay $100 to buy back this one share that you collected $10 for. So you technically lost 10 times the amount of money that you actually invested into this. So that's why whenever you short a stock, it's very, very, very dangerous, just because, again, the amount that you can lose is technically unlimited, whereas the amount that you can gain is 100%.
Right. And the whole thing that you're hearing about all this, like, retail investors, don't know what they're doing and stuff like that, like people like Dave and I know what we're doing. We are investors ourselves, and we understand, how the market works. So obviously with us, it's interesting to see that, Wall Street loves to basically paint this picture that we don't know what we're doing. I mean, the whole purpose is that the reason why GameStop is at the price that it is right now is because we understood that Wall Street over leveraged themselves to a point where you're shorting 140% of shares. There's not even enough shares to buy back. And we did what is called a short squeeze. So all of us collectively together pulled our money to bring this price up so that when these Wall Street guys need to buy it back, they're pretty much having to use more than what's in their hedge fund. Right. So there are, smart people out there, much smarter than you and I, who see these things, who analyze these things. And we made a bet and we won. But at the end of the day, we can't win because the system itself is rigged against us to win against these Wall Street hedge funds.
Yeah. And so to give a bit of context as to what happened with GameStop, the past few years, it hasn't been doing well. The stock price has been going down bit by bit every single year. And these huge hedge funds, pretty much a lot of them bet against them, pretty much expecting GameStop to go bankrupt, especially because of the pandemic. They automatically assume, hey, GameStop with all these shops in the malls, they're gonna go bankrupt. They're done. Let's all short the crap out of the stock and wait for it to become $0 and collect everything. So that's why there was 140% of the shares that was being shorted. So, and then what happened was, again, like Phil mentioned, all these, people, all these guys all collectively got in there together and started buying the stock back up at around, I think it was like $2-3. It got as low as last year or this year. So $2-3. Mm-hmm. And from that $2-3, it kind of slowly jumped to $4-5. Then it jumped to $10-12. And then what happened around, I think around the price of $16-17, Ryan Cohen, so one of the co-founders of Chewy, he actually bought a huge chunk of shares into GameStop as well. He went on the board of GameStop, and that's when everyone started realizing, hey, this is for real. It could be a short squeeze. And what happened was a lot of people started buying all the stocks up and not allow these stocks to be shorted or sold or be borrowed and resold again. So what happened was a lot of these shorters had to start covering because there was not enough stock available on the market for people to pretty much to buy back. So when what happened was the price just kept going higher at an exponential crazy rate because there were so many people that shorted these stocks that all these guys had to cover their shorts, or else they were paying interest on the shorts that they were pretty much borrowing to sell first. So these guys all had to jump on the bandwagon, start buying the stock back to cover their shorts. And it went from like $2, $15, $30, $50. And as of this morning, it got as high as $470. And then there was some crazy news that came out pretty much with Robinhood. They stopped allowing trading of GameStop on their platform.
Right. So a lot of the people, what are called either day traders or retail investors, whatever name you want to put it, we're basically not the hedge funds. And we're using, apps like Robinhood, or we're using our prime brokerage, which would be in Canada, like either the big banks or like all these other virtual brokers.
Interactive brokers is popular. And they also banned or stopped allowing trading on these stock tickers also.
Right, exactly. And the problem is when you start picking and choosing what people can and cannot buy, you're artificially manipulating the demand in the market for whatever stock. It might be GameStop today. It might be another company tomorrow. And the thing is, these guys have that sort of control to be able to say what we are allowed and not allowed to buy. Like, who are we to say that GameStop is not worth $25 billion? That's not the point. The point is, if the market thinks that GameStop is actually worth $500, $1,000, the market should be able to do that. And by limiting the access now, people are getting fed up with all these different tactics that Wall Street is using to try to manipulate the game for their own gain.
But what's really fucked up though is that you need a bit more context behind this, because two of the main hedge funds that shorted GameStop was Melvin Capital and Citron.
Citron Research, which are big firms that short, companies that they think are going.
So they were shorting huge. They had puts, they had everything, expecting the price to go low to zero, and they were getting burned. They were losing billions of dollars by the day. Huge money was being lost, to the point of where some of their friends had to bail them out and send them money so they had enough money to cover everything. One of them was also Citadel, I believe, right?
So Citadel Securities is actually one of the big market makers of this, and it's pretty interesting how it's all intertwined, because they all kind of have a hand in each other's pockets as well.
And Citadel also owns, or is partners or owns shares in Robinhood, right?
In Robinhood.
Yeah. So pretty much what it seems like it happened, what happened today, which a lot of people are losing their shit, going crazy. There's a class action lawsuit that I see already happening right now. Pretty much the price of GameStop got as high as $470. And then from around that point, what happened was Robinhood and a lot of other online platforms says we are no longer selling or working with these stock tickers at GameStop anymore. And you cannot buy them anymore. You can only sell them now, meaning they were forcing the price to only go down. So what's interesting about this also, that pretty much, because at that point, a lot of people were saying Citadel was when they started shorting it at that price. So at $400 some odd, they pretty much borrowed whatever shares was available again, started shorting a whole bunch of that again, and not allowing anybody to ever buy the price up, only to be able to cover. So again, it just kept crashing, went from 470 at 10 a.m. And by 11:20, it went as low as I think $120, which is like a 75% drop in an hour, which is unbelievable. And then again, it's recovered back a bit to 220, I think it is. But pretty much the main point is that these guys got to short it again at $450, and for them to have pretty much they changed the rules of the game. They pretty much changed it
in the middle of the game.
In the middle of the game.
Right. And that is what people are livid about, because you can't just go in and change the rules and bend it back to your favor in the middle of the fourth quarter. That's not how games work. I mean, we fair and square saw and analyzed that, hey, this doesn't make any sense. These hedge funds are actually, shorting more than what exists in the market. And GameStop has a great board, has a great new CEO, a guy running to try to bring this company back from the ground, and to have them be able to even short what exists, like more than what actually exists in the market, is unbelievable. And you know what? There are people smarter than you and I who saw this and bought these shares, and they should be rewarded for it, for beating the hedge funds at their own game. But now the hedge funds,
I think this morning when I looked at it, I read somewhere that now there's about 240% of the shares that are being shorted. So it went from being 140% to right now being 240% of the shares that are shorted.
Right.
Again, that's insane, because they're pretty much banking on this thing to crash and sell, and they're borrowing to get rid of it at whatever price possible. And they are pretty much trying to spook all the retail investors to get rid of their stocks and sell it for cheap, because these guys are dumping it right now. These guys are dumping it hard in hopes that everyone else pretty much dumps it. And again, for them to eventually cover back at a much cheaper price.
Yep. Yeah. So remember what we were saying about how when you start playing with options, there is unlimited risk. Like there is a point where obviously a hedge fund cannot exist because there's only so much money out there for you to cover your shorts with. And we're seeing the system sort of fall apart. We're seeing the dominoes fall, and they are trying to bend the rules in the middle of the game to try to keep the cards stacked in their favor.
And the best part about all of this is that when you look in the news everywhere, a lot of the media pretty much says Reddit, Wall Street Bets / these retail investors are ruining the stock market. They're fucking shit up. They're not playing stocks properly. They're just fucking going at it like a casino right now. And, these guys are ruining the stock market. They should not be allowed. We have to change things. We can't let these people ruin it for the rest of us, because that's not how investing is supposed to be. And this is not what we were taught. And you guys are doing it all wrong. And you guys need to stop this stuff right now. That's pretty much what everywhere,
Exactly.
every media you're looking at, that's what they're saying right now. Like, you guys are all the bad guys for ruining the stock market.
Exactly. They're painting Wall Street Bets, retail investors as these dumb people who should just give money to the hedge funds so that they give you, the 6% and keep the millions for themselves so that they can fund their lavish lifestyles at our expense.
Which is ridiculous, because again, what's crazy is that, I've been, keeping track and reading and following up with everything that's going on. And a lot of the stories that I'm reading from all these, Redditors or Wall Street Bet people, pretty much their stories are, hey, I invested $1,000 and now I have, like 15,000. It's insane. I don't know how this happened. I'm going to, pay off my school loans. I'm going to, pay off my mortgage, or now I have extra money so we can pay during this crazy pandemic. So a lot of the people who made money off of GameStop in the past, let's say, few months, but really in the past, I'd say 2 weeks, it really went wild, are just regular people like you and me. They're not hedge fund managers who have their yachts and Lamborghinis and Ferraris. They're all just regular people like you and I, who right now are just, again, they lucked out because they beat Wall Street. They beat the system.
Exactly. So, going back to even before all of this, like if you look at the 2008 financial crisis, we saw hedge funds being irresponsible as well. You saw hedge funds making bets, leveraged bets, which is basically when you take even more money to basically fund your bets. And you see them make these risky bad bets, and it actually does fall apart. And guess who's on the hook to bail them out? It's the taxpayers. It's the government. It's tax-paying people like you and I who lose. And we're the ones that suffer because of the stupid, irresponsible mistakes that these hedge funds are, first of all, even able to make in the first place, which is nuts.
It's true. It's insane they're allowed to do this. And again, just to make these insane bets like this in hopes that the economy will go down, or certain companies will go down, shorting the crap out of them. And then, hey, if it doesn't pan out or if it doesn't work out for them, they can turn around and go, hey, if my hedge fund goes down and if I go bankrupt, well, there's going to be a lot of hundreds or thousands of people that are going to be jobless. So, hey, government, I think you guys need to give us some money and bail us out so we can fix this problem and make sure all these people still have jobs. Because if not, we're going to lose a lot of jobs. So make sure you help us out. So again, as one of the things was what? Heads, I win. Tail.
So the saying that I have is flip a coin, heads, Wall Street wins, tails, retail investor loses. It's at the end of the day, there's no winning out of all this when they pretty much control the rules, and they can just, spin it on a dime and say, oh, guys, we were kidding about our shorts, like you can't do that. No, like how is that fair for the retail investors like us who, made a bet on AMC thinking that like after the pandemic, people will go back to theaters again. It's like, okay, I'll throw some money here, throw some money there. First of all, if we're just buying long, which basically means we're buying the stock to hold on to, I can't actually buy more than what I have, and I, as the investor, understand the risk that I'm putting myself into when I'm going out there to buy stocks, because at the end of the day, any stock could be worth $0 the next day. But I'm not taking someone else's money and leveraging it and losing it all on behalf of everyone else, and then getting you to pay me back through the government because I was wrong. Like, how does that even make sense?
No, it doesn't make any sense at all. And the crazy and silly thing was, while this was all going on yesterday, I had a bit of money in my my account also. I'm like, all right, cool. Let's try to throw a few dollars at this and see what happens. Let me just, ride the hype and see what happens. And the crazy thing is, I wasn't able to make any of the trades or purchases for any of those stocks that were trying to get a short squeeze. So there was quite a few of them.
Right.
I'll name a few of them. There's GameStop, there was AMC, there's Nokia, Naked, Dillard's, Express, costs, even that thing called blockbuster liquidation,
Yeah.
where it was like I think like at 1 penny, and it got as high as 10 cents or something. So again, that's 10 times, right? So again, some of
Yeah.
these, again, a lot of these stocks, what happened was, again, they were super, 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 super shorted. And then regular people like us, we saw that it was so shorted that they all decided to buy these stocks and at this price and pretty much keep it and not sell it. And because the price kept going higher and higher and higher, all these people that were shorting it, they said, shit, this price is not going down. It's only going to go up. If I don't cover first and the next guy covers before I do, well, the price is going to go up. And again, so everyone pretty much is kind of try to jump in to cover all of their short. And that's what's called a short squeeze, pretty much. All these shorts are trying to cover it, which makes the price go so high because there's a very small amount of shares that are being sold.
Right. And this is exactly why in Wall Street Bets, you see all these memes, you see all these rockets and these diamond hands and all this stuff, because at the end of the day, the fundamental aspect of showing it to the man is actually holding this stock. And for them, you would have to pry the stock out of their dead cold hands to be able to take it from them. Like that's like, it's not even about the price anymore. People keep asking me like, Phil, is GameStop going up? Is GameStop going down? That is not the point. Like, I'll even tell you, David, I have some stock in GameStop, and I consider that a donation to the fundamental principle of what is happening. I don't care if it's worth $0. I went into this knowing like, hey, like this system is rigged. This system is fucked. And you're going to have to pry it from my cold dead hands if you want the GameStop stock.
and no, like you said, this game is completely rigged for GameStop to have dropped 75% in an hour and 20 minutes today. And again, not because people were trying to sell it. It's just because though it was being shorted at the price of $460 and no one was allowed to buy the price to go back up, which is insane because just, again, it's just, there's a lot of people who lost a lot of money, from yesterday till today. I mean, I don't know if they lost, there's a lot of people who got in at an early price. So maybe they lost some of their profits, but 100% there are people that came in and who bought in at $300, $400, and then it tanked all the way 75% in a matter of an hour and 20 minutes. So ridiculous, no fault of theirs, pretty much just getting screwed again by the man, if you want to call it that, right?
Right. And then the thing is that, a lot of people who do trading, they like to follow the whales is what it's called. They like to follow people who, have, they like to mimic each other's moves, obviously, because if this guy, is worth $1 billion, he must be doing something right. Correct. I mean, this is what hedge funds do as well. Hedge funds will also mimic other hedge funds moves to a point where you're shorting more than 100% of the stock that exists. I mean, that's how you get GameStop at like 140% short. And I've always seen it like this. There are good whales and there are bad whales. Okay. So like when you look at someone like Chamath Papadilla, so I don't even know how to say his last name. It's so difficult. He's just a Sri Lankan guy. He's like a billionaire venture capitalist investor. But at the end of the day, he also went into GameStop. He was a loud voice for us to basically learn and tell these guys on Wall Street, like, why people are angry, because they obviously don't seem to see it themselves. He went in there and was basically our voice and was saying like, this, you have to start listening to these people. When you start limiting their access to even getting this stuff, I mean, you're creating a larger problem than what already exists today. Like, he has a great interview on CNBC that he did with Scott of I think it's called like the Halftime Report. And it's like a 30-minute conversation. He pretty much lays it on the line and said, this is why people are angry. And one of the big points that he made was that when you start to gatekeep what individual investors are allowed to do, you create a world where institutions only make money for institutional investors, and then the retail investor gets the scraps. So literally, like the way you think of our socioeconomic system, you get the elites in their ivory towers who are throwing their breadcrumbs to the rest of us peasants on the ground, saying, hey, you can have what's left of all of this.
And that's
we
really
beat them.
And that's
We
really
beat
what
them
it
at
is,
their own
right?
game.
Absolutely. Yeah. And again, with these guys, again, what it is, what Phil means by that is pretty much, a lot of companies that come out that have stocks available. Well, you know what? It doesn't go in the stock market right away. It goes to these guys' friends at a special discounted price because you have a high valuation, because you have a lot of dollars. You know what? We're going to sell you these stocks first before we put it onto the market at a very good price. And pretty much that's the thing. Those guys can buy it at those price before it ever gets into the stock market. And people like you and I can only buy it after all these guys have bought as much as they want. And whatever's left, they throw it onto the market and we have to fight for the scraps. And the idea is as people keep wanting to buy these scraps, well, all these guys who bought so much of it literally just right before, they unload it on the market and they make their quick return in a matter of days. They're pretty much in and out of some of these stocks.
This is what's called IPOing, David. This is when the rich offload their shares to the public, because by the end of the day, they captured most of the value already anyway. So This is why the whole IPOing system is bullshit too. And why I think that the whole accredited investor stuff, where they make this facade that people like you and I, who are not institutional investors, we are barred from being able to participate in buying some securities because they think we're dumb. At the end of the day, they think we're dumb. We don't have enough money to do it. And they're doing it as a way to protect, quote unquote, the investor, which is complete bullshit, because we obviously go into an investment knowing that we can lose it all. And this is where, like, if you want to look up, accredited investors, that's some research that you can do as well about how this system makes it look like they're protecting the investors when all they're doing is making the rich richer.
It's pretty insane what's going on right now. And everybody is, the internet is going crazy. People are not happy. Even AOC spoke about it, right? She tweeted about it. What did she say?
Oh my God. Yeah. It was hilarious because actually when she tweeted about how they should investigate Robinhood for basically market manipulating, because they stopped the buying aspect of XYZ stock, right?
Yeah.
Which is complete market manipulation out in the open for everyone to see. And Ted Cruz actually retweeted and said, I completely agree with her. And then AOC replied back, it's like, okay, you know what? You tried to get me killed like 3 weeks ago. I mean, I'll pass, but I'd love to work on, with other Republican senators or other Republicans to fix this issue. But it's just hilarious because the issue is so bad that it's an issue that both the Republicans and the Democrats can agree on. Like AOC and Ted Cruz, two people who you would never think would actually agree on something, actually agreed on something.
And that's a pretty big problem out there when that starts happening in the world.
Right. And one other thing that we should bring up is one of the, man, he's like a god in Wall Street Bets right now.
He's going to have movies made out of it. There's going to be stories and movies because of this guy.
Yeah. I hope whoever made The Big Short is going to do another version of this, but for this one guy. His name is called Deep Fucking Value. And he was the guy who turned $55K into end of day yesterday when, GameStop was at its fair market value price, $48 million. So he turned a profit of, holy crap, 47 million, whatever. But it's just unbelievable that this guy was able to do that and did it fairly, but now he's getting fucked because the Wall Street guys are finding ways to recoup their losses and limit the wins from the retail investors.
So again, this one guy, Deep Fucking Value, he is I don't know. He's the Wall Street bet messiah, pretty much. Let's call him. I mean, I think he started this whole bet against pretty much for GameStop about a year ago, right? Again, $55,000. And what's crazy, I've talked to, Kathy about it. I'm just like, yo, this guy somehow had the balls to it went from 55,000 to 100,000. He did 100%. He didn't sell. Okay, he got to $1 million 20 times. He didn't sell. Got to 10 million. He didn't sell. And yesterday, 48 million. How does a guy have balls so big to go from $55,000 to $48 million in a matter of months and not sell? It's just unbelievable. And again, this is why there's going to be a movie made about this whole situation that happened. I mean, there was a movie with the Big Short, right? So this is, probably, I don't know if it's as big as that, but it's, again, it affects a lot of the retail investors, everyone, the regular Joe Blow, you, me, who took, a lot of these people took their $600, $1,200 to put it into GameStop. And again, all these people didn't have a lot of money, but when you had so many people all get together, all put in $1,000, that made the price of these stocks skyrocket. So there was a huge short squeeze on a lot of these stocks.
I don't know how true this is though, David, but apparently Deep Fucking Value was basically mimicking a trade made by Michael Burry, which is the big short guy, the guy who bet against the subprime mortgages back in 2008. He was just mimicking his moves. And he was able to make such a great call. And every single day he was posting updates on his position, even up until yesterday. So yesterday, when things were still quote unquote fair, he actually holds 500 contracts, which is basically, so one contract is, you said 100 shares, right?
Yep. The choice or the option of being able to purchase 100 shares by the time of the expiry date of the contract.
Exactly. Yeah, that's exactly right. So he held 500 of these contracts that he paid 20 cents for. And he basically made a call to buy these shares at an option of $12. Okay. So when you look at, and when you do the math, basically what that means is he had a total gain of 163,257%.
That's ridiculous. That's insane.
That is, I mean, absolutely insane.
Good for this guy, because again, he was just another regular person of sorts that pretty much, told fuck you to all the institutions and all those hedge funds.
Yeah. And he fully did it legally, did it in a way that was basically fair and playing by the rules. And he should get every ounce of that. And it's just disheartening to see Wall Street figuring out ways to claw this away from him when he fully, made a great bet and he won based on the rules set out by the way we conduct business, which is the rules that, Wall Street uses too. And it's just nuts to think that because he's, I guess, quote unquote, winning, for $48 million from these hedge funds, that he might not see that.
They had to shut it down pretty much. They weren't happy with that.
Yeah.
This I think pretty much when all of this happened right now, it gave too many people the idea of, hey, how can I do this? How can I join this? And how can I participate? And pretty much short squeeze these people and screw these hedge funds. And when that came out and that kind of became the story of what, Wall Street Bets was trying to do, then again, pretty much the whole world went crazy, shut it down. No, this is illegal. What you guys are doing. You're not supposed to be doing this. You're not supposed to be colluding and buying prices of stocks up when it's not worth this much. This is supposed to be a very bad company, supposed to be bankrupt. So you guys should not be buying stocks in this company. You guys are stupid. Just stop doing that. Stop. And that's pretty much what they're trying to tell us right now. And because people pretty much kept ignoring them for the past few months, and more people kept shorting the stock, right? As the price went from $4 to 10 to 20 to 30, every time it went up one extra level, there were new people that jumped on board to try to short it because same thing. Hey, this price is ridiculous. It shouldn't be here. It should be down there. So I'm going to short it. But what happened was that pretty much created a perfect storm where there's so many people that kept shorting it continually while it was going up, that there was a massive amount of people that needed to cover all these shorts, and hence the reason why the price went as high as $470 this morning. So insane.
This is nuts. At the end of the day, it's just, I hope that people are able to see for the very first time, not even the first time, like for another time in front of their eyes, these Wall Street big wigs, literally putting a gun to your head and telling me to give them my money, and not even having the choice to say no. Because at the end of the day, that's basically what they're doing to all of us. And then when they're wrong, they get bailed us by us as well. But when I'm wrong about my bets, no one's coming to save me.
No, you're getting jack all when you make the
No,
wrong bets, you're screwed, buddy. It's too bad for you. Your loss, my
exactly.
gain.
Yeah. So whatever you hear out there on the media about, hey, people are going to get hurt, investors need more protection from them making stupid decisions, that's bullshit. Because at the end of the day, I you as an investor know what you're getting into. So does the Wall Street bigwigs. The only thing is the Wall Street bigwigs know that when they fail, they get propped up again. That's the difference.
So again, a pretty messed up situation for everybody. Not so much for them, mostly for us. I mean, and right now it's it's still in the middle of the storm right now. We don't know what's going to be happening because right now the price is still pretty insane in the sense that it's still $220 when I last checked for GameStop. And again, for example, one of the other crazy one was AMC. I think that one was just literally like a month ago. It's $2, went to $4, and from literally $4 to overnight, it jumped up to like 16, closed at $19 or so. So
Right.
meaning again, roughly a 450% gain in one day.
Right. And congratulations to all those people who made a great bet thinking that AMC after the pandemic would come back and people would go back to the theaters and start watching movies again. If you made that bet, man, I hope you enjoy the money you deserve, because at the end of the day, like we took it from the man, and completely fairly and squarely. And I hope it gets you through the pandemic a little bit longer. I hope it helps you run your small business a little longer. At the end of the day, nobody should be able to take that away from you.
But again, I mean, just to update you, pretty much, again, it went to $20 yesterday, but AMC was one of the other stocks also that was being forbidden to be bought today. And I think the price crashed like 50% in a day also. So it was 20 yesterday, got as low, I think $8, if not less today. So again, they got screwed. They got, again, the people who invested into AMC yesterday, the day before, they got screwed again today, because all these platforms are not allowing people to buy this stock anymore. And if you can't buy it up, it means it can only go down.
At the end of the day, we obviously don't underestimate our abilities. You as an individual investor shouldn't underestimate your abilities as well. If you put the time and the work into learning how the market works, making your own bets, and you're right about something, like that should be something that you're allowed to do. So when people tell you,
and with all of this, that's why it goes back to why being, Bitcoin or crypto is very interesting in terms of comparing it to the stock market, right?
Exactly, Dave. Like at the end of the day, what actually really interests me with Bitcoin and also Ethereum is because we're actually trying to create alternative solutions to the problem, which is this, like these centralized entities being able to dictate what we're allowed and not allowed to do in order to benefit a certain class. And when you have things like decentralized finance, which is another big thing that is being developed in the blockchain world, it's basically trying to create these markets now, but not having it be centrally controlled by a specific entity. So what Robinhood did today to investors by restricting them from buying a stock would not be possible in the decentralized finance world, because nobody would be able to control that. And that is where like the intersections of like centralized and decentralized finance start to, you're able to see the benefits of why we can't always trust a third party to really do specific things like this for us. Because at the end of the day, David, I think it was you that told me that when you buy a stock from a broker, the broker can lend that stock out to other people without asking you first.
Yep, it's true.
Like, how wrong is that? Like this is a stock that you bought with your own money, and the broker is acting on your behalf, but the broker gets to make the decision about what they can do with your physical stock.
Yeah, they pretty much take that stock, they lend it to someone who shorts it or who sells it, and they lend it to them with interest on it. So they're collecting interest on pretty much the stock that they're lending this person to sell. And that kind of screws you as a person, because you just allowed your stock to be sold for a cheaper price, and that might have an effect on other stock or other prices where it just keeps going down. and you're kind of shooting yourself in the foot, and you're not getting anything out of it other than the broker pretty much themselves getting the interest, which they're happy with. They don't care if the price goes up or down. They're making interest on it. But the person who's losing again is the one who pretty much invested initially to buy that stock.
Yeah. So this is where it really comes down to such an important aspect of blockchain and cryptocurrency, is the fact that you can physically custody these digital assets yourself. No one can lend it on your behalf without your permission, because they don't actually hold the physical asset. You always actually keep it yourself. And when you create finance where you don't have centralized entities that are basically able to dictate what you're allowed and not allowed to do, that sounds more like a free market to me. So,
which we don't have today. It seems clearly it's not. That's what it is. That there's so many brokers today that said that you're not allowed to trade this stock or this stock or this stock or this stock because it's dangerous, and we're protecting you from trading it. And no, you're not allowed to trade. That's straight up what they're telling everybody today.
Yeah, exactly. And this is where Wall Street likes to come down and say, and do these manipulative sort of moves where they restrict us from buying stuff, and then they trade amongst themselves to bring it to a price that they think is reasonable for them, so that they can get out of their unlimited liability positions.
That's crazy.
And that to me is utter bullshit.
It's completely ridiculous. But I mean, you know, with all of that, that's what investing is. Investing is, you can make hundreds or thousands of % on your dollar, or you can lose it all tomorrow also. So that's why, guys, always be very, very careful whenever you invest. Don't over leverage yourself. Don't go selling your homes, investing into something because you heard a friend or a family or somebody on Reddit tell you it's a good opportunity, which again, it could be a good chance, but also just know what goes up will come down also. And again, you don't want to be the person left holding the bag, is really what it is.
Yep. And that's really what it is. And I guess the other point to make to that is, it's always us that gets left with holding the bag. And that is really where the problem is that no matter where the price goes, we are always the ones left holding the bag. And that is not right.
Well, it was exactly like what you said before. Flip a coin, heads Wall Street wins, tails retail investor loses. That's a very fun game for them and not so much for us.
Exactly. So with regards to that, I think we've pretty much both have, let off a little bit of steam here and really just try to help you understand the situation as to what's going on, because this is equivalent to us storming the Capitol building virtually. I would say, except nobody died today. No. So that's a difference. So with that, we'll do our next episode on time to do the Bitcoin giveaway.
Yep.
If you love this podcast and you want to get more insights into some of the stuff we talked about, please reach out to us. knowyourpotential.com is how you can reach both David and I and the podcast. And please subscribe, follow, and help us get the word out here so we can, educate people more about what's happening.
Absolutely. And again, we love to hear your feedback. So please make sure you like, comment, share our posts. Again, whatever you guys can do to help promote our Know Your Potential podcast, we'd really appreciate it. Again, it's just getting the word out to friends and families about it.
Yeah, it would really help us really take on Goliath together.
That's what it is.
Awesome. Right. Thanks, guys, for listening.
With that, thank you so much. Have yourselves a great one. Take care. And again, invest smartly.